Or okay. Hi everyone. This is Al from Boston. This is my first YouTube video, and I wanted to share some things with you about the squeeze, the mechanics of it all. So I'm giving you a quick crash course on behavioral finance. It's a two-part video series. We start with the first one, which is what we believe is the floor. Accompanying me is my squad leader from the Marine Corps, my friend Kyle. We've been friends for 20 years. He's been an investor, day trader. He knows how the market works. He's very, very knowledgeable, and I think he's a value add for the conversation. So I hope you find him beneficial. So a little bit about me. I'm a prior service United States Marine. I was in the infantry with, like I said, Kyle. I have 3 combat deployments. I have an undergrad degree in government with a concentration on Middle Eastern policies. I'm finishing up business school right now. I have an MBA with a finance concentration and a master's in finance at Bentley University. The majority of my adult life has been working in consulting, mostly from government, military, and politics. And as anyone who's ever worked in consulting knows, when you're not consulting, you're starving. So it's really a feast or famine type of a job. And so that's the most experience I've had. I've worked in all these different sectors, and I understand the workings of these complex systems that are out there and the safeguards they have in place. I've never worked for a finance organization. I don't have a license to sell or buy securities or give financial advice. I don't have the CPA licensor, I think is what it's called. I don't have that. I got introduced through the Wall Street Warfighter program with General Peter Pace. My opinions are based on my own experiences. The colleagues that I've made at Harvard who work on Wall Street, my academic research at school, and the resources at my university, including the professors there and the full-time professionals that do this for a living. Everything I say on here that also Kyle says is not financial advice. Neither one of us has a license to sell or broker securities or anything like that. And, you know, everything is just take it with a grain of salt. It's just our opinion. On a personal note, I'm not better than you in this thing. In other words, I don't have any more value than you do. I'm not better than any YouTuber or any other investor. I don't want a following. I don't want clout. I'm not into that sort of thing. And I always leave this off with the motto of the Force Reconnaissance guys. I wasn't a Force guy, but I think this is great. And I think it's very fitting. I'm never above you. I'm never below you, but I'm always beside you. And in this squeeze, I will be beside you on this, and I will be in your corner, and I hope you will be in mine. So that said, let me introduce Kyle. Kyle, go ahead, fire off.
Wonderful sentiment there, by the way. I was along with Al in the infantry back in the day. I got out and became an airline pilot. I've been flying for just about 20 years now. I started day trading mostly as a hobby and a little bit more as it became a viable source of income for a while. A couple of years ago, I started winding down on that to focus more on my primary career, and I had pretty much phased out of it until around the beginning of this year, when I became embroiled in the entire AMC GME conspiracy here, and I've been working on that with Al ever since. So that brings us up to today.
All right, cool. Okay, so let's go to the next slide. This is the name of the game, all right? The name of the game is not holding just yet. It's actually to make you sell your AMC stocks. The earlier, the better. That is the name of the game. You already know how to hold. We don't have to discuss that. You know what you need to do is buy and hold, buy and hold. You know that. But the real game, the game that's being played with the hedge funds and the media, is actually to make you sell your AMC stocks. That's the whole thing. That's the whole thing. And the earlier, the better. They want to be able to cover before this squeeze gets to astronomical heights, as I call it. So here's our thesis. The road to 1 million per AMC share. I believe that there are over 20 billion shares that have to be covered. And this is the crux of my thesis. We have had tons of people do DD with the start date of January, right? That's when the first gamma squeeze was. And all the data that we've accumulated started in January. What a lot of people don't know is this has been shorted. This particular company has been shorted for years. 5, if I can, for the most part, I can see that has had real traction with their algorithm. It's the same players that were there 5 years ago that are here today. It's a cash cow for them. And it's pretty substantial. And I want to tell you this because a lot of you guys are thinking that, hey, we can exit and bracket out at, 10, 15,000 because a YouTuber said so. And then there's all this fear and anxiety over, what market makers can do, the market itself, or public officials, and just all kinds of treachery. And I'm here to tell you that this play is probably the most, it will be more recognized, in my opinion, than GME. I know I'm a GME holder as well, and I know that might offend some of you, and I'm sorry if it does. It's just my opinion. But I believe that the amount of shares that have been shorted, the FTDs, and all the synthetics supersede anything that GME has. And Kyle, you have any comments to make on that?
Yeah, so essentially, let's break down a little bit more where this 20 billion shares come from. The tricky part about all this is that different investment bankers, hedge funds, and so on, they're not obligated to disclose the size of their short position. So a lot of the data that we have on that subject alone is just a best guess. Initially, what we had was a lot of naked shorting where they would borrow a share, short it, and then re-borrow it, and then short it again, up to initially we had guessed maybe 5 or 6 times. That's called naked shorting. That's blatantly illegal, but the SEC rarely, if ever, takes any action regarding this naked shorting. On top of that, they started to fail to deliver on call options when the price started to exceed higher and higher points, when AMC went from $8 to $14, and then $14 to $28, and $28 all the way up to 60. They started to fail to deliver on these options. And what they would do is they would temporarily cover those fails to deliver by creating a synthetic share by pairing an at the money put with an in the money call. The big trick is that this is just essentially writing an IOU that ultimately will have to be canceled out along with the rest of those shorts. So to completely exit their positions, all of these fail to delivers will have to be cashed out along with their short positions. And that's what's going to drive this thing. And it's just at completely astronomical heights that we can only guess at based on the number of call options that have failed to deliver over the last year, and those who have chosen to disclose a portion of their short positions.
So let's take a look at who these people are. Let's take a real in-depth look. Okay, so there's 51 of them as of September the 30th. Okay, 3 big banks: Bank of America, Goldman, and the Royal Bank of Canada, who is owned by PNC Financial, which is another financial conglomerate. And they have trillions of dollars among themselves in assets. They have money. It's not a little bit of money. They have tons and tons of money. Lots of money. And it's not just Citadel that has it. Bank of America and Goldman alone, tremendous amounts of wealth that they've stored away, and they can pay for this, a good portion of it at least, if they choose not to cover. And we're not only fighting against them, we're actually also fighting against the GME short sellers as well. And some of them are overlapping. You'll notice Citadel, SIG, and a couple of other Simplex. So there's quite a few of these guys that are on both ends, and they're barely keeping it together. So keep that in mind. I want to talk about a YouTuber named Sam, and he's got this fractal theory. So I read his theory, and I think it's solid. I think it's definitely something that everyone should look at. I also looked at some of the other comments he'd made in regarding the patterns that they use to short and naked short and so on and so forth. And I found such in 2015 to 2020. That's the years we see these guys have been operating. Like I said, this has been a cash cow to them. They have been here for a significant amount of time playing this game, shorting the stock, bringing it down to levels so they can make tons of money on options. Kyle, real quick, options multipliers. So we have a $35 strike price, actually a $35 price right now. And this was March. And by June, it was down to 28.83. What kind of money can a hedge fund make that if they shorted that and hit the strike price?
So, well, at that point, what you're looking at, they're buying puts, and they're able to they're using those puts to be able to sell at that 35, or they're offering those puts to others for the chance to redeem their shares or sell their shares at 35 rather than 28. So especially if like if this is a recurring cycle that you're manipulating, the volume that you can cover is substantial, right?
So in the billions, you could say.
Easily.
Would you say any of these are naked shorts, synthetics? I mean, what's the
well, we can't really see the action on these prices, like what's going on behind the scenes. But if you're dropping, say from $35 down to $28 is what, $7 spread, and you are naked shorting it, so you're reselling the same short multiple times, it's unlimited. It's unlimited cash potential.
Okay. So here we have another example of how they do this. It's 2016, it's January. By March, it goes up to $30 again. And they bring it down to, what was it, 26? And it just keeps going. I mean, this is just one example of the stuff that I've seen them do. They're having it lift up with actual sellers or buyers, and then they just short it down. And one good example is right here. Look at this. 35 up here, right? $35, $29 by February. This is in December right here. December 19th. And by February the next year, it's down to $29. So they're doing this all the time. They're making money. My guess is, my hypothesis is telling me that they're naked shorting. They're doing the same thing that they've always done, and they think they're not going to get caught. And I think that's where all these FTDs and all that stuff came from. I think they've been hiding it other places. We know they did it in Brazil, but we don't know where else they've been doing this. And just another one, look at this one. $23 down to $12. They're making real money. They're making billions of dollars doing this. So it's my thesis that there's so much of this stuff happening that we don't even know how many naked shorts, how many synthetics. We don't know any of that stuff. But we know that they're doing all kinds of stuff like this, and they're winning. And it's safe to say, because of greed, which is human nature, that this is probably true. I'm willing to bet that it's true. And with that being said, that's what the crux of my hypothesis is. And I don't believe that 10 to 15,000 is an appropriate price to bracket out or sell at. I really don't. And I want to talk about some of the inherent dangers, and just some of the finer points about bracketing. Okay, Kyle, give me your take on it, on bracketing. What do you think?
So
This is stupid,
I'm of two minds of it, because I spent 5 years day trading, and this is a day trading play. I mean, for us that are involved in the squeeze, it's been 10 months now, so it is more of a swing trade, but it's bracketing is very much the crux of what you would do in a day trading position. you're going to try and capitalize on the volatility by picking up some high and then dropping it down low and buying back in again. And it's very difficult to tell somebody with a day trader mindset that they should resist the temptation to do this. But it's, that's part of that is the challenge. The big thing is, we can't say for certain once this squeeze really starts that you'll be able to buy back in at all, because since so many of these positions are synthetic, and the shorts will be closing their, these short sold shares as they're shorted and then returned to the previous owner, those will also cease to exist, those naked shorts. So there's no guarantee that somebody who sells at what they feel is a suitable peak, and then they come down to buy back in at a lower level, that there will actually be shares for them to buy. There may be nothing, because those positions are being closed out each time. Now we have a huge field to go through. If we do end up at that 20 billion shares to cover is accurate, but the chances, the risk of selling a sizable portion of the entirety of your position in AMC, and then finding out that you can't buy back in at a lower level, you've just short sold, you've screwed yourself. So, and there it is.
I got one for you. What about getting margin called?
Yeah,
there's always that.
Yeah. But then we deal with the other things. It's like, well, this is a chance for everybody that's involved to make life-changing money. And a lot of people are approaching it, since it is so, it's not a question of how, it's a question of when, that they can be patient and wait and strive for something greater. But the environment is going to be very challenging to begin with. There are a lot of unknowns. There's a lot of data that's going to be going back and forth, and the risk of attempting to bracket and then finding yourself locked out of the situation is tremendously high. So
I'm just thinking. Go ahead. I was just thinking about just this worst case scenario where it's like, all right, you sold at 10,000, right? And then you have got approved for margin, and it goes down to 15,000, and you bought at 15,000 on margin. Then the price goes down even further because of selling, and it goes down to 5,000 to like a couple hundred. Imagine getting a margin call, and that's it. There's your entire position gone, liquidated. That's it. Your squeeze is over. So it's like the greed is just consuming people into doing dumb things. What's that old saying? Pigs go to market and hogs go to slaughter. That's what that is. And I think there's also just ethical reasons. There are people out there that have shares that are in the single digits, like 10 or 15 or 20 or just under 10 maybe, right? And I think when you sell early, you're slowing down the squeeze. You're taking away rocket fuel for the squeeze, right? It's going to slow us down. Just don't do it. Hold on to it. You can get more if you just have a little bit of patience, if you have enough discipline in your body to walk away for a few minutes, let it, let that moment pass you by, that glimpse, that short second where you're anxiety ridden, and just walk away, And here's the other thing. We don't know how many the swing traders and paper hands have actually sold their position. We don't know how much they've covered so far. And we had just the other day when Adam Aarons made those purchases for $500,000 along with somebody else, there was other employees that sold. I don't know if you're aware of that or not, but there was employees that actually sold. And that's something to keep in mind. There's going to be employees from AMC that have, X amount of shares, and they're willing to sell those things. And, that's
So
another thing. Go ahead.
something I wanted to expound on in there, because you talked about people purchasing back in on margin, and I wanted to explain how that would happen, even unintentionally, for somebody who's attempting to bracket.
Right.
Because the flaw that we have to deal with in our system is the T+2 to close a trade. Meaning, if you drop out of a trade, and this is even for most day traders deal with this on the regular. When you drop out of a trade, you have to wait 2 days for that trade to settle. If you drop out of it and then immediately drop back in, your money isn't actually there yet because that trade hasn't settled. So what the trading platform is doing is extending you the courtesy of that money on margin. And if your trade then plummets further due to volatility or something like that, you now owe on that margin in spite of your previous trade not clearing. So you could stand to lose a tremendous amount of money. I felt like, because you kind of glossed over that little bit, I
Yeah.
wanted to make sure that was clear, that people could, who are doing this or attempting to do this, if they're not paying attention to what they're doing, could find themselves margin called even accidentally.
I dig that. Hey, let me show you my Bloomberg terminal. I want to show you guys something, right? So here we are. This is all the holders, right? This is who holds. These are all the institutional holders. See, we got 44 million shares, 30 million, going all the way down. And then we have, these are the sources where they gather the information from. But this is interesting. Look at this, right? Where are the employees? It's, Form 4. Form 4, these are all the employees that have substantial positions. Look how many their employees have sold, right? There's been a few. There's 18,000 who sold on the first, 11,000, 30,000, 29,000. And of course, our
But
faithfully
look at
Adam.
that beautiful man, Adam Aaron, there,
Oh, you
adding
gotta love him.
274,000. This guy has faith.
It's amazing.
I'm kind of inclined to add up. I wonder if he bought those shares. What if we added those up really quickly? I know I'm getting off topic here, but I'm curious. So we've got 29 plus 30.
Are you doing it? Okay.
Yeah.
So all the January, or I'm sorry, all the November sales are 33,000, 36, 40, 36 plus 323.
It's not all of them, but it's close.
184.
So this is 220,000 shares.
Jesus.
He purchased 274,000 shares. There is a chance he paid cash to augment his position to those from those people. That is
Tremendous.
Quite curious.
That's tremendous. I mean, look at that. This guy, his employees sold, right? All these guys right here. Anthony, sorry, just right here. Sorry. All these guys sold. Kevin O'Connor, Ellis, McDonald, Sage, and all those sells, Adam Aaron's bottom, just so we wouldn't have to suffer our loss during the squeeze. Tremendous, absolutely tremendous, Kyle.
Yeah. I think there's a very strong chance of that. Yeah.
That's exactly what happened.
Mm-hmm.
When you think about it, that's what happened. That's my opinion, right?
He definitely has faith that this is going to cook off, and he's stuck between a rock and a hard place, because he can't make any statement about the subject without being potentially charged with stock manipulation. So he's really painted into a corner as to what he can do or say about this entire situation. He's done his best. He's made all those statements, suggesting that there are 4 million retail holders with an average of 175 shares apiece. very easily suggests that there are more. I mean, that 4 million people own, what was it, 98% of the float, 95% of the float,
Yeah.
which says, okay, then, if Vanguard is holding 30 million shares, the math doesn't add up there, does it?
No.
So, that even as best as he could present it, he suggested that there was manipulation going on behind the scenes and so on. So I think in spite of the restrictions that have been placed on him, the man has done just an absolutely tremendous job building faith and trust in the brand.
Absolutely.
And continues to do so. And they are just absolutely killing it on the profits right now.
This is tremendous. When you really think about this, look at all the people that are buying in. There's people that are still buying into this. And of course, we see what's happening here, ETF. That's interesting, Goldman. But
Yeah.
people are still buying in. People like the stock. They see value in the stock. And I think when this thing cooks off, it says they added 3 million. They added 3 million BlackRock. Okay, it's interesting. So you're seeing all the things that are going on, that's going on with this stock. There's a lot of holders, a lot of institutions that have bought into these. Let me tell you something. Institutions are not our friends, right? As retail investors, they're not our friends. They have their own position for their clients. There's an expectation that when they hit a certain amount, because what they're doing, Kyle, is they're probably sending out their algos into Twitter, Reddit, Facebook, and they're getting a consensus on what a exit amount is. Like, what's the APE's exit amount, right? And a lot of times it's probably over $100,000. There's those small few people that are going to exit at 10 or 15, or, it is what it is. But I think the majority of them are over 100,000. And hopefully with the video we just made, people are more inclined to up that to 1 million, because I think it's doable. I absolutely think it's doable. But what are your thoughts on that? I mean, would you agree that we can reach 1 million? I mean, is it feasible?
I think 1 million, it's gone up. Back when I assumed that it was maybe double the float, that kind of thing, I set my minimum floor at about $130,000, and I used some natural logarithm price targeting for that. Now that we're guessing around 20 times the actual float, I think $1 million is easy to achieve. That it will be able to arc that high, as long as people understand that what they are holding has value. It is the lifeblood of a company that has been margin called. So 130,000 is my floor, and I really do believe we'll be able to see peak around 1 million, and once we touch that, that's when I'll start looking at selling.
Outstanding. So there you go. This is my conservative estimate. The value of the stock is not between 10 and 15,000 and bracketing all that nonsense that some people tell you. I think it's between 85 and 110,000. And I think the ceiling, I think it's very, very easily obtained, $1 million. And let me tell you this, let's say 40% of all the APE's paper hand, right? We can still exceed the floor. We can still make those high numbers, because we still have the institutions and we still own the float. How many times float do we own? It's like 4, some crazy number. Do you know?
How many which?
How many times float do we own? We own the float. How many times? Like probably.
So the estimate from the shareholders meeting is that we own 95% of the float, but with the number of synthetics and shorts that are out there, the estimate right now is 20 times the float exists and is in circulation. So
insane.
Yeah.
So if you're saying to yourself, hey, I'm going to get out of $10,000-$15,000, hey man, you're only screwing yourself. You're only screwing yourself, because the rest of us are going to the moon. Math is there. The math doesn't lie. You know, you can come up with whatever excuse you want to leave early and leave the party early, by all means, but you're only screwing yourself and your family. This is going to go to astronomical heights. Let me tell you, we don't know. We don't know how long these hedge funds are going to be in play for. Tomorrow morning, Adam Aarons could say, hey, we're doing dividends. And given how many shares that are out there and, you know, getting an actual share count, so on and so forth, and everybody getting a dividend, those hedge funds, Kyle, real quick, just to make sure my math is correct, if they offer a dividend, it would be in the trillions that the hedge funds would have to pay, right? Am I getting that right?
Yeah. So, well, the trick is that would apply to the shorts, but not to the fails to deliver.
Right.
The issue with the fails to deliver is that they would then have to start this gigantic trail of tracking down who actually has the share, who's in possession of it, and who the money is owed to, which is not a bad thing, because that ends up opening up the market maker ultimately to fraud for what they've conducted, because they're now standing in the way of somebody receiving their earned dividend. But when it comes to the shorts and the naked shorts, this is where the true damage lies, because anybody who has shorted the stock is required to pay the dividend rather than receive the dividend. And anyone who has shorted it, sorted the same share 5, 6, 8 times, will have to pay 5, 6, 8 times whatever that dividend may be. So while we can't truly accurately estimate the number of times some of these shares have been shorted, what the level of naked shorts are, because the companies are not required to disclose them, we can easily say that if he decides to cut, what did they just report in earnings? $750 million. So
Yeah.
let's say they do $250 million for the dividend, and these guys are shorted 5, 10 times. They're going to be up in the $1 trillion range.
If Adam Aarons drops a dividend, it's over. It's over. There's no way they're going to be able to pay for all this stuff. It's going to be impossible. No one's going to loan them the money, and then we will cruise to 1 million, because there's not going to be anybody left. Everyone's going to be owing people money that they won't be able to short, won't be able to do anything. They'll be crippled. So keep that in mind. So hey, that's how I feel about this. 85 to 110,000, or in Kyle's case, 130. But of course, the ceiling, what we can easily break, $1 million US. All right. So I hope you keep this in mind. I hope, like I said, this is not financial advice. These are opinions. Take them with a grain of salt. And I hope you enjoyed this video. We're going to be doing another series of videos on market manipulation. You do not want to miss that. Even if you flat out reject my thesis, perfectly happy with it. Absolutely no problem, no issues. But the market manipulation series that we're doing on, you cannot afford to miss, because it will help you throughout the life of the life cycle of your investments. You will be able to see and understand what's happening in a stock, who's manipulating it, how it's being manipulated. We've got like 30 slides on different tactics that we've seen, that we've documented, and we want you to take a look at them, because I think it's going to help you later on. So I hope
that's quite honestly, that's my choice topic. I have some particularly harsh words to say of the American stock system at this point. The stock exchange, the entire thing, really. I don't know what the SEC has been doing, but it definitely hasn't been doing its job the way things have gotten. So
okay. So thank you very much again. We'll have Kyle's talk about that, and we'll talk to you guys real soon. Thanks so much for watching the video. Don't hit subscribe, don't hit like or any of that stuff. Just watch it. If you found value, just share it on your social media platforms. Post it in wherever you need to, trade it on Twitter or whatever. I'm not looking for clout. not looking for popularity, just looking to educate
Get the
people,
word
right?
out.
Get the word out that you don't have to exit out at 10 or 15,000, that 1 million is feasible. It's realistic. It's doable, as they say. So thank you so much, guys. Take good care, and we'll see you in the next video. See ya.